What's up guys, Taiki here, and welcome to part 3 on why I think Canto has a reasonable chance of hitting all-time highs. I'm a little sick today, so apologies if I sometimes have difficulty talking or I sniffle a few times. I thought I wouldn't make this video, but I'm still determined to give weekly updates on where I stand with the Canto Thesis, which I highlighted in September, a couple weeks ago. At the time, Canto is at 14 cents, now it's at 23.7. You can kind of see like this big weekly wick there. We actually saw like a 30% correction in the price of Canto. Yeah, so if Canto were to resume its uptrend, I think this was enough. This correction was enough to shake out the weekends. And in order for you to understand the Canto thesis, which I know I've talked about on Twitter and YouTube pretty much extensively, but you have to understand the maker thesis. So I've been pretty bold up on MKR, and I did mention that if maker just gets above its local highs at roughly $1,300. This was in mid-September. I think people are going to chase smaller coins like Canto because people don't like Maker. They understand why it's going to go up, but they just don't want to hold it because some influencers do not like the token. And I've been a big proponent that I think Maker ETH, the ratio of the price of Maker divided by the price of Ether, has to get to 1 and beyond. And right now it's sitting at 0.9, and we laid out the maker thesis back in mid-July, when it was like 0.5. So it's basically up 80% since then. I do think that this ratio is going to continue going up. Why? Well, if you look at some of my channel metrics, and this, maybe you can argue that no one likes to watch DeFi videos, and my videos have gone lower in quality. I've gotten those feedback, but this is true for most other YouTube channels. So I got this email from YouTube yesterday about, hey, Taiki, you got this many views, 0 new subscribers, and people were like, oh, okay, that's not too bad. But if you actually look at my actual numbers, it's pretty bad, right? So this is for 2023, this is my subscriber count. And every time I upload a video, I just lose subscribers. I think people think crypto is a scam, and whenever they see my video on the timeline, they just unsubscribe. And this trend hasn't, it does not stop, which is pretty insane. I lost 30 subscribers 2 days ago, which is pretty insane. But and by the way, I'm not hiding this, right? I just don't run ads, so that's why my estimated revenue is 0. And my argument has been, I'm bullish DeFi. I want to be optimistic in the markets, but the fact is, retail is not interested. Money is leaving the ecosystem, and even Ether, right? If you go to ultrasound.money, even Ether has gone inflationary recently. If you go look at the Ether supply over the past 30 days, it's gone up. Why? Because no one is using the chain. There's too much block space. No one wants it. And what's the result? Ether is inflationary. Alt L1 tokens are inflationary. Most DeFi tokens are inflationary. Everything is inflationary. So it makes sense for on average, if no money is coming into the space, price has to go down. And why do I like Maker? Well, Maker is actually, not actually, but it's kind of deflationary, right? In the sense that Maker owns $2.5 billion worth of T-bills, and every 2 weeks, every month or so, there's millions of dollars that flow into the chain from government interest payments. So Maker owns $2.5 billion, that's earning roughly 5%. And every time these T-bills mature, the money hits the chain. And as long as the system surplus is over $50 million, every 2 hours, the protocol buys back $20,000 of its own token. So it's actually the only token that has structural inflows into the system. It doesn't matter if crypto is pumping. It doesn't matter if crypto is dumping. It doesn't matter if meme coins are pumping. Nothing really matters. All that matters is over time, millions of dollars are going to hit the chain, and it's going to buy back its own token. And the estimated annual profits, $72 million. This is actually underestimated because if you look into some of these vaults, for example, Block Tower Andromeda, it estimates that the annual fees are 4.5%, but it's actually closer to 5. These are all estimates. So as long as rates stay higher for longer, which I think is going to be the case, then tokenized treasury projects should just outperform Ether. And that's kind of been my view. And I do expect this to continue grinding up because who's buying Ether right now, right? Maybe crypto natives, right? Retail is not buying Ether. Who's buying Maker? Well, the government is buying Maker, right? Through these government instruments. I know that's a meme, but it's a good meme, I think. And the reason I'm bullish tokenized treasuries and real world assets is that, crypto yields have collapsed. No one wants to, yield warm on chain anymore. But if you can tokenize these, instruments on chain, you can actually make pretty interesting products. For example, there's this product called Agave. So it's like Aave on the Gnosis chain. And right now you can stake DAI to earn 10%. Well, where is the yield coming from? So what they do is if you look into bridges, right? Like when you bridge from Ethereum to other chains, there's a bunch of DAI stuck in the chain, not earning anything. And basically what the team did was that, okay, like there's roughly $90 million worth of DAI in the bridge. Like, let's just stake everything, right? Like, let's just put everything into the DAI savings rate, which, is like, you can stake DAI to earn 5%, which is roughly the risk-free rate. The DSR rate is 5%. And so, like $90 million worth of DAI, just staking the DSR, earning 5%. But if only half of that, let's say $45 million gets staked into this contract, then people that stake in here earn 10%, right? Because $90 million worth of DAI is being staked, but only all that yield is only being distributed to $45 million worth of stakers. And like through on-chain efficiencies, market structure, if you tokenize these things on-chain, you can actually create actual products that people want, right? Like a lot of people, like I think they get into crypto for the Ponzi's, and I mean, sure, like that's fine, right? Like you entered in during the bull market, Ponzi's go up, and then they come down to zero. But I think the next bull market has to be led by actual sustainable yield, actual sustainable product that people actually want. Like, let me ask you, like, do you want to earn 5% on your dollars on chain? Yes or no? Yes. Like, why wouldn't you? Right? Would you rather earn 5% from the DSR or 10% for some random, like, I don't know, like DEX token, DEX farm on ZK Sync, right? I hope you chose the 5%, right? Because like no one wants to go to ZK Sync, get rugged, and it's really not worth it. So it's been my thought that like these types of products, tokenized treasuries, should accrue TVL, and TVL is usually not a great metric in DeFi, but if you're like a tokenized, if you're like a stablecoin project where you issue stablecoins, take the backing by T-bills with it, yeah, like the more TVL, the more revenue, the more profits, and like the demand for stablecoin yields shouldn't be it shouldn't be cannibalized, right? I mean, like if you think about the liquid staking derivative, right? It's like Lido, Rocket Pool, sFRAX. They're all competing for the limited amount of ether in the ecosystem. But at least for stablecoins, there's trillions of like total addressable market. Like the TAM of stablecoins are huge. And reasonably, if you expect DeFi to hit all-time highs in TVL, is it going to be from Ponzi's? Probably not. It's going to be from institutions deploying dollars on chain, and the first thing that they're going to adopt is probably going to be tokenized deals, tokenized treasuries. So for that reason, I'm just been incredibly bullish. Like any stablecoin issuer that can issue stablecoins, take the backing, and buy T-bills with it. For some reason, I couldn't like load the Dune Analytics dashboard, but sFRAX even recently, or like 2 days ago on Wednesday, launched staked sFRAX, and there's $35 million worth of sFRAX that entered a staking contract, and it's yielding 7%. So I own a bunch of Maker, right? I own like much more Maker than I do CANTO, but I still own big bags of CANTO, which I've laid out before, and then I own a little bit of FXX because I think their tokenomics are pretty kind of flawed in the short term, but that's kind of in my investment focus, right? I'm not a Maker maxi, I'm just a maxi of tokenized treasuries, and if I spot different projects doing different things, then it's going to be worth my attention. And CANTO is a layer 2. Okay, let me just refresh this. And they issued their own stablecoin called Note, and they're going to take the backing of Note and buy T-bills with it. And because it's a layer 2, I would expect that if the TVL of CANTO gets like, let's say all-time highs, I would also expect the price to follow. And is it really unreasonable to expect, once they launch, can they gain like $200 million worth of TVL? Totally, right? I mean, if you go to chains, right? I'm farming this too, by the way. But if you go to base chain and you look at Aerodrome, which is like basically like a solid leaf fork, in the first day, or in the first 2 days, or the first few days, it hit like $200 million in TVL, right? For a solid leaf fork from like anonymous developers, right? Or pseudonymous, whatever they are. So if CANTO were to launch tokenized treasuries, boost the yield with CANTO emissions, then why can't it? Right? Why can't it? And HFA Research is my research company, and we mentioned this as well. People feel FOMO when Maker ETH goes up only, but they don't know own Maker because they have certain biases against it. So people want to own smaller coins, and I think Canto is interesting. It's a layer 2. I think the layer 2 part is kind of like a meme, but the potential upside of like a layer 1 or like a layer 2 token is infinite, right? Like Maker, maybe the upside is capped, so like maybe people aren't that excited, but I still think I mean, come on, they make so much money, right? I still think it's gonna continue to outperform, but let's kind of go here. Yeah, they partnered with Fortunify, which I think is a great company. They partnered with Hashnote, which I think is backed by Cumberland. So like these are like the suits, right? That's like also the other thing, like the only way for DeFi and crypto to get back to the glory days is if not only retail, right? Is if institutions buy into crypto, and of course, right, we have the Bitcoin ETF rumors, the ETH futures ETF just launched, and I'm sure eventually there's going to be an Ether ETF, but Bitcoin and ETH like ETFs, I mean, yeah, like that makes sense, but like that's not going to be enough, right? I mean, maybe that's going to be enough, but like what are they going to adopt next, right? Like what are the suits going to adopt next, right? It's probably going to be real world assets, right? Like even Larry Fink, right, the founder or like the CEO of BlackRock said, yeah, he believes in tokenization of securities. So like what is the next vertical that the institutions are going to adopt? RWAs. So where should I look to invest if we're in this like bear market and we're going to hopefully enter like a bull market in the next, let's say 12 to 24 months? Well, I'm going to look into RWAs. Right? I mean, like what I'm saying, I don't think is like that complex, or I think it's like pretty simple. I think it's, it's like right in front of you, right? It's like, like rates are going to be 5%. And I think a lot of people expect, crypto to only do well when the Fed cuts rates. But like, is the Fed going to cut rates back to zero again? Probably not. Right? Even if the Fed cuts rates, like maybe we're going to be above 4% for quite some time. And in that environment, I still think that most crypto just can't find a product market fit. I think they're all like mostly going to suffer. So, I just feel like these tokenized treasury projects are going to be cash flow machines. And if they can find ways to deliver value back to its own native token, I think they're going to be amazing. So, like they're going to do the same thing where they have their native lending market. You can kind of see it here, right? You can use USDC to mint note and whatnot. But these KYC players can, mint, basically like mint tokenized T-bills on chain, like let's say earning like roughly 5%, and then borrow notes against it, and then they can kind of loop that strategy. Retail can't do this, right? Only like KYC people. Only KYC people can mint and redeem these tokens, which might also like increase security and whatnot. But anyways, and if these institutions are, let's say, borrowing note at 4.8%, right? Because if they borrow note at 4.8%, and then use that to buy something that's yielding 5%, I mean, they're making free money basically, right? I mean, it's not free money, but you can make what I'm going for, right? It's basically a carry trade. Then anyone can lend out note to earn, let's say 4.75% or something, like whatever, right? And then that's like another way to like kind of distribute tokenized deals to like, on-chain holders permissionlessly. There's gonna be like VE Canto, which I think is gonna be kind of cool. I'm not a huge fan of like VE tokenomics, but like maybe it can work if it's like an L2, like who knows, right? And the only reason VE tokenomics didn't work is because, I mean, where are the fees coming from, right? It's coming from swap fees, and like who's buying Curve, right? Like, who the hell is buying Curve right now when the founder owns so much of the supply? But if there's external cash flows coming in, right? Like in the form of Maker, right? It's like so much money, right? Like so much money coming into the chain every couple of weeks, every couple of months, and like maybe that external cash flow is going to be enough to create enough utility for VE Canto to make it worth. I mean, I have no idea. And from my knowledge, I think VE Canto, you can lock it to like direct emissions. So if you're an institution, like maybe you want to borrow a bunch of notes because the carry trade is very, very profitable. So maybe they're going to be incentivized to buy Canto, lock it, and then, I mean, I have no idea. Who knows, right? I'm not speaking in absolutes. My entire thesis is that, okay, Canto, if it hits all-time highs, the token probably hits all-time highs. Let me go back to Canto here. Yeah, like, if TVL hits all-time highs, I think token price will hit all-time highs. And TVL is not just like a vanity metric because I mean, their main product is tokenized treasuries, right? And as there's more TVL, the more money everyone in the space makes, right? It's like tokenized treasuries are like the only PVE, like player versus environment, like sector in crypto, because like when you're buying meme coins right now, like who are you competing against, right? Like other crypto degens that believe that meme coins are the future of finance. And the only way you make money is if, it's like the greater fool theory. But at least with this, right? It's like, at least, the government is subsidizing, like if you buy Maker, right? It doesn't mean that you're going to make money 100% of the time, but you have a much better chance of making money because at least your buys are being subsidized. So, it's more PVE than PVP, right? Player versus player. Right, not player versus player, but instead player versus environment, and they're constantly cutting emissions. And actually, let's go to their Twitter. So I don't exactly know when they're going to launch, but like they had this proposal yesterday. This upgrade prepares the lending market for RWA support. So I mean, it should be imminent, right? I mean, I don't think it's like that far out, and do I know that it's going to go up in price? I mean, I'm making a bet that it will, right? Because I feel like my edge in crypto is like identifying where flows, like where is money going to flow? And if I can predict that ahead of the market, then like what bets can I place to actually profit off of that? And I try to make these videos and like publish these research reports in public, so that people can digest it. And if you agree with it, you can buy in. If not, you don't have to. Right? Nothing is financial advice. I'm like just some dude on the internet. I still think that Canto farms are pretty good. Canto is pretty inflationary, but I mean, if you think about it, right, it's like why is it inflationary? Well, it's because like 13% of the tokens, Canto, right, went to the contributors. And I'm not sure if there's like any vesting, but like the founders have it, right? The team has it. And then 87%, the rest of it, is literally being used to distribute to the community, right? You can LP, right, provide liquidity for Canto Note and be paid 100%. Canto ETH, 69%, that's pretty funny. Or you can LP for Note USDC and be paid like 9 to 10%. And these yields are probably going to be juiced up whenever this thing goes live, because they need like sufficient like note liquidity. So like the yields are going to be insane. It is an L2 token. The market cap, hold on, let me. Right, I mean, if you look at all these like market caps, right, it's like multi Elrond is like 700 million FDV, Phantom 560, Kava 48, like Flow 600. I mean, like what is this, right? Like what the hell is this? At least Canto, right? Okay, let me just verify that I'm a human here. I am not an NPC or an AI. FDV is like 240. Okay, it is inflationary, right? I mean, but that also means that hey, you can at least farm it. But like they don't really have, like Canto doesn't really have VCs, right? And if a VC wants to buy in, they have to buy from the open market, right? Like buy our bags, god damn it, right? Like because if you look at all the VCs, right, like they literally invest in Aptos, and what, like 51% of the community, well, like community my ass, right? It's literally going to the team. 19% to the team, right? Foundation, 16.5% of the team. So 100% of the tokens are going to the team, right? And like who the hell is backing this thing? Let's see, right? FTX, Jump Crypto, like who else? Like Andreessen Horowitz, Multicoin, Circle, right? Like why, right? Like why, right? They raised 300. I mean, who knows? Maybe Aptos is the future of finance, but like why, as a retail participant, do I want to support this damn coin, right? It's just enriching the VCs. I don't even like the VCs. Yeah, I don't even like the VCs. And like, that's also like one of the reasons I started this new podcast, Crypto Market Wizards. So it's a podcast diving into the minds of successful crypto traders focused on the liquid markets, specifically not VCs, right? Because the current landscape of podcasting in crypto is like VCs like just circle jerking each other about how bullish they are crypto and how they're investing in early stage companies. It's like, cool, you're all smart people. I don't hate you, but that's not relatable at all. Okay, like I'm in the trenches, right? I don't participate in seed deals. I don't do angel investing. I don't like take money from projects, right? I don't run ads. So like we're all in the trenches. Episode 1 was with Eric. We know we're both Maker and Canto bulls. So if you want to listen to that conversation, that could be worthwhile. but anyways, like that's kind of, that's kind of where I am with Canto. And I mean, obviously, I hope it like plays out. And maybe the title of the video makes it sound like I know for a fact that's gonna happen. But nothing in crypto is absolutes, right? I just share ideas, and we'll see if it plays out. I am positioned, right? I have, like, right? Don't just walk, like, don't just talk, right? Like walk the walk or walk the talk, or like whatever the saying is. Like my capital is at risk. I'm like, and given the state of the markets, I just like don't see how, because I mean, yeah, crypto is in shambles, right? Like no one's using crypto, right? Like no one cares about crypto. So if I'm gonna hold anything, right? Like would I rather hold this the virgin inflationary ETH, or the deflationary Chad maker, right? And then I kind of go at the risk curve and say, okay, like I have big bags of maker, it's doing pretty well. Maker is like a better store value than Ether in the short to medium term, as long as the markets remain pretty boring. And I mean, as you can see, right? Like I've like doubled my ETH stack just like by holding maker. And like if, okay, like like this trade gone out well for me, but like, okay, like where is the market looking next, right? Like what is the market going to look at? And maybe maybe I'm shilling the top of the RWA trade, but also I just like don't think that RWAs, like I still think like in like the macro terms, right? Like I still think that we're in the early stages of the RWA trade. And a lot of people don't like it, because it doesn't go with their ethos of what crypto should be, right? Because a lot of people, they get into crypto because screw the government, screw the suits, crypto is going to flip TradFi or whatever, right? That's kind of like blockchains are going to flip TradFi, right? That's kind of like their like their ideal utopian world. But how realistic is that? Like I don't really think that's very like realistic. I think what's more likely is there's crypto here, right? There's crypto, like we're doing interesting products, right? We're trying to build like the layer, like financial freedom, like whatever it is. And then there's like TradFi here, right? I think it's much bigger. And like what do you expect them to do? Like, do you think that they're gonna like just like adopt crypto because it's the future of finance? Like no, we have to have people in crypto, meet them in the middle, right? Like there's crypto here, and there's going to be like projects like Fortunify, Hashnode that say, like, hey, TradFi, like crypto allows for all these things to happen. You can tokenize these things on chain, so there's like better liquidity. You can trade them when the markets are closed. You can use it as collateral, so maybe you can borrow money at like a more efficient rate. I mean, like whatever the narrative is. I mean, only time will tell. But I still think that the RWA trade still has legs. And before I get into like the on-chain data, so going back to the Canto price, right? It's like why did I like why did I like why was I looking at this, and like why did I buy the time I did? My first buy was like, but so full transparency, my first buy was like roughly around 13 cents, and then I doubled my bags on the second or the third, around 20 cents. So that's so my cost basis. And by the way, like I post research for free, but if you want to upgrade your research, I do have the premium Discord, HFA research. I do, what is this? Let's go here. 2 weekly premium videos. I do weekly AMA live streams. We have one of the, we do have like the largest DeFi community, right? At least like the exclusive side. So feel free to check that out. But I also do some on-chain data, I suppose, and it's pretty interesting looking into on-chain data and seeing like what the whales are doing. So I'll share two wallets. For example, I have no idea who this person is, but this person owns, or this entity, right, owns 150K worth of Tether and then 750K of Canto. And if you just look at the transactions, all it does is like buy Canto, right, with Tether. And we can do, right, you can go to copy address here, go to deck screener, go to maker, not MakerDAO, right? Like the maker here, and then apply the particular address. And you can kind of see, okay, like this address, hold up, let's look into the weekly actually. I don't know how to better visualize this, but it started buying, it like funded the wallet in like September. It bought at like 9 cents, right? It started buying. so it caused like this pump, and then after the market corrected, it still kept buying, and it stopped buying, right? Or it was like buying at the same time I did, I guess, on the 27th, and then it stopped buying from like the 27th to, let's say, the like October 8th. But as soon as the market started correcting, right, it was like doing some dip plunge protection, right? So I'm like, okay, like I find it very, very hard for the price of Canto to get below, let's say, 20 cents. So that's like one, right? And of course, like one wallet isn't enough. And maybe, the fact that they still have 150K left means that, they're still going to deploy this. Because I mean, it definitely seems like they're going to. And maybe like whenever this fund fills their bags, they're going to start shilling it on Twitter or something, right? Like who knows? And then there's this other whale account called Blur, known as a Canto whale, or maybe not a Canto whale, but like, if you look at his portfolio, let's look at both, like on the Ethereum side, they own, like he agrees with the Maker thesis. He owns over $4 million with the Maker, and then you look into the Canto side, and what is he doing? Right, he's like buying a bunch of Canto, and you can do the same thing. You can copy his address, his or her or their address. Go here, click Maker, kabam, apply, and let's see. Okay, let's look into the daily actually. Right, and then okay, this isn't, hold up. Yeah, so they started buying, basically on this breakout candle, essentially bought on the way up, and then bought some here, right, on this dip, right? If you're gonna zoom in here, right, it bought here, and then it bought basically, after this correction and like plunge protection, it bought here for whatever reason, and it bought during this 8% wick, right, candle, on the hourly. It bought here, right, after the market's plunged again. Maybe it's more visible in the 4-hour. Yeah, like whenever there's like a correction, it like just buys. So it definitely seems like the people in the smart money, right, they're buying Canto, and if I'm on their side, then like I'm pretty happy here. And even like Canto, I mean, this thing is down 1% this week, right? And what is Maker weekly? It's down 0.8%. How much is Bitcoin down? It's down 4%. How much is Ether down? It's down 5.4%, right? And I mean, the ETH chart looks like pretty horrendous. And if you look at the Maker chart, I mean, this looks pretty bullish. I mean, if you ask me, like this green line is a 200-week moving average. It acted as resistance. Now it looks like it's acting as support. Maybe it's a cup and handle, right? Maybe it's a cup and handle. I don't really do TA stuff, but I mostly look at fundamentals. I sometimes use TA to like, look into stuff, but kind of zooming in, like resistance, maybe it's support. Who knows? And I mean, this has been a bunch of selling in MKR, right? Because the fact that the price is going down, even though these buybacks are happening, means that okay, like there's some person that's like trying to get out, some fund that's like lightening their bags, and I don't really trade leverage. I just like find fundamentally strong projects and like buy, and I bought it in like July, and like I haven't traded around it, right? I like just hold, so I don't care to like trade around these things, but I mean, the entire Canto thesis relies on Maker ETH going up, in my opinion. So I think looking at Maker is very, very important to the Canto thesis, because like I mentioned here, right? Like if Maker just continues to go up and it catches people off guard, then people are going to be like, wow, like what small coin can I buy, right? Like that's going to be like the first thought, right? Because no one wants to buy Maker. So keeping track of Maker, I think is very important if you want to be bullish Canto. But I really do like Maker. I know that they get a lot of flack for, like the DAO governance and like, people like to troll Maker, right? Because, like people just like to make fun of other people to make themselves feel better. But Maker is the oldest DAO in crypto. And if you actually track their governance, like they're actually pretty, they're pretty advanced and like they're pretty professional. I mean, of course, it's not as professional as like some C Corp, right? Like a regular public company and whatnot. But for example, even like the DSR is managed like pretty well. So right now, let's kind of go here. So obviously, if you stake DAI here, you earn 5%. And the current utilization is 30.3. So 30.3% of all DAI is earning 5%. Okay. What is the other 69% doing? I have no idea, but I do expect this to go up over time. But this is not good for maker profitability, because as more DAI gets staked, it increases their cost, right? It increases their cost, which lowers their profitability. But to hedge against that, or maybe not hedge, but to account for that, once the utilization gets to 35%, the DSR goes down to 4.83, and once it gets above 50%, it's going to go down to 4.2. I don't really see it getting to 50% anytime soon, but like maybe it's going to get to tier 2. And if it gets to tier 2, it goes down by 17 basis points. Will people leave, right? Like if you're staking DAI for 5%, are going to leave at 4.83? I mean, maybe a few people, but I really don't think it's going to make that much of a difference. And I mean, yeah, like, like Maker, I mean, like just look at their governance, right? I mean, they go through, they talk about a lot of stuff. Like there's all these sub DAOs, they're going to do endgame, which is going to make Maker profitability go up to like over $100 million sometime next year. I mean, there's so much going on. And I still like Maker. I still like the Maker ETH trade. I expect it to continue trending up. Like, do I know when it's going to hit parity, right? When Maker equals 1 ETH? Parity, right? I have no idea when that's going to happen. Right? Like this is the... Here, right? When is it going to get to parity? I have no idea. But it sure looks like, according to, let's draw like a trend line. It's like according to this trend line, I mean, who knows? This should happen by November. Okay. And who knows? Maybe either no one uses Ether, right? Or just no one uses the blockchain itself, right? And I mean, we're basically back at FTX levels, which is pretty sad. Right, we had this crazy pump or this crazy spike because of Pepe, and then everyone lost money. Aside from the insiders, everyone lost money, or most people lost money. And we're back to FTX levels. So this is also another bearish case for Ether. And actually, I don't hold that much Ether anymore. I'm just mostly in RWA coins, which might be further at the risk curve. But I've done the work, and I think this is my bet, right? I mean, this slope is very steep. So maybe it ends up being like this. Maybe something like this is more likely, and then maybe we hit parity in December. But either way, right? As long as this is trending up, I just feel things like CANTO, FXS can continue to do well. FXS is definitely weak. It's actually, I'm underwater on this, and it's not happy. I'm not a happy camper, and there are reasons, right? sFRAX is never the industry leader or the leader in any sector. There's no token value accrual because the sFRAX, the stablecoin, is currently under collateralized by roughly 8%. So all the revenue has to go into that before it goes to token holders. And I think there's a bunch of holders, and even myself, right? There's a reason why my FXS bags are tiny relative to Maker and CANTO, because I think Maker and CANTO are it's just higher quality, or CANTO is not higher quality, right? There's a reason why it's only $130 million market cap, but if you just think about the price of CANTO, and the cycles it had, right? The initial hype cycle it had, which I did not participate in, this one, right? It was people just shilling it online and saying it's the future of finance, and then it's everyone dumped, right? It's okay, it's over. But now, right? Why is it going up? Well, they rebranded to a layer 2, and they're really embracing RWAs, real world assets. So should you really look at this evaluation to determine where CANTO is going to go? I don't really think so, right? I think this asset has to be repriced, and I'm not saying it has to be repriced to $10, but why can't it hit all-time highs, right? Yes, it's inflationary, but it's inflationary because it needs to decentralize its supply, right? People hate inflationary stuff. I do too. But I can at least understand why this thing is inflationary. And anyone can farm this thing, right? You can bridge to CANTO, You can earn 99% in stable coins and like, 69 to 100% in the pool twos, right? So, I mean, I'd rather like bet on this hitting all-time highs than fucking Aptos, right? Like, fucking Aptos. So I have so many tabs open, so I'm not sure if I went through everything. I think I did. All right. It's a longer video, but I'm surprised I was able to do this because I'm still pretty sick. But when I'm on a roll, I'm on a roll, I suppose. Okay, so we'll see how it goes. I like it. You don't have to like it. And that's also the other thing, right? It's like I don't want to create FOMO. The market conditions are very tough. There's nothing wrong. Like you don't have to buy this, right? Like no one's forcing you to buy this, right? I'm like just making a video because I get a lot of requests. And this is like part of my research process, right? I like to just post things in public, get feedback, and then try to learn from what other people say about it. There's nothing wrong with like holding Ether and Bitcoin or whatever, right? And like just waiting for more obvious opportunities. Maybe this is like obvious. I have no idea. Like you don't need to FOMO, right? Like if you miss Canto and you're in crypto for the next 5 years, like who cares, right? Who cares? But I think the overall message of the video is no one is using a chain, okay? So like why would I buy? Like most coins are not going to do well in this environment. And the only sector that I think is going to do well are like things like this, right? Like it's just buying back its own token. So that's going to shape how I look at the markets. That's going to shape my views. And if rates are going to remain high for the foreseeable future, then yeah, Maker might be a better store of value than ETH. Am I going to think that in a year from now? Probably not. But from a portfolio perspective, right, as a person that trades liquid markets, no VCs, I like the relative comfort of MKR. And if you want to be frisky, maybe Canto. So thank you guys for watching. See you guys another time, and bye-bye.